Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to Rebelcon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called Rebelcon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Diamond, platinum, and gold packages are selling out. Sign up now for Rebelcon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the Rebellion.
Good morning. I'm Pete Najarian. This is the Take for Market Rebellion on this Thursday morning. Yes, we're over the hump, and here we go. Well, we look back to the hump day itself, Jerome Powell Day, as it's now becoming known, and we did something that we haven't done in a very long period of time. Not only did we raise rates, but we did exactly like everybody had predicted for the most part, because they leaked it out. And of course, we did a 75 basis points move to the upside. The 2-year note yesterday was dropping. So we had a combination of a lot of different things going on. Crude was kind of pulling back just a little bit as well. As a matter of fact, it finished the day all the way down to 116 after being closer to 120, 122. We've talked about some of those pauses and some of that pullback might be what we're seeing right now. We'll see. A day or two does not make a trend, but we'll see as time goes by. But what was interesting was after the Fed, everything else, we started to see the market was starting to rip to the upside. The market did rip to the upside. We were up over 600 points on the Dow. We were up significantly on the NASDAQ. And then you get to the final 45 minutes. We talked about this probably for the better part of the last 6 months, maybe even longer than that, where we've had these breaks of time where things really do move at an unbelievable velocity. Well, 45 minutes, we actually sold off about 300 points on the Dow to finish the day still positive, still up 300 points, but giving up those big, huge gains. Same thing with the NASDAQ. NASDAQ lost about 140 points in that final 45 minutes, still finished up 270 points. It was up over 400 points, but giving it up. And that's something that, we all obviously watch very closely. And then we start to think about how does that really impact not only the aftermarkets, but also the next day. Well, we're seeing some of that reaction today. We'll get into that in just a minute. Volatility was between 28 and 32, finished right around 29, just under 40 million contracts yesterday. Tesla, Amazon, and Apple, those are now your big three every single day, all over 1 million contracts yesterday trading. So what was really a big strength of that big push yesterday? Consumer discretionary. You look at Tesla, you look at Amazon, two monstrous stocks making huge moves. That was up about 3% yesterday, the sector itself. Technology up about 2% as well. Apple, Netflix, Meta, Google, Microsoft, all having a really nice performance day yesterday. Financials as well, with Citi and Bank of America and JP Morgan and Goldman Sachs, all a part of that move to the upside. About 1.25% for those financials. But industrials even hung in there pretty decent. It was Honeywell and Boeing kind of leading that charge. When I look at really what the only thing that was really pulling on the markets at all was energy. And you look at some of the big names, Exxon and Chevron, of course. And then you've got the pioneers, you've got Marathon, you've got Devon, you've got EOG, those kind of names. And you look at those beta names, you look at Valero and Schlumberger and Baker Hughes. They were all in negative territory yesterday, pulling on the markets a little bit, along with some of those Chinese names as well, NetEase and PDD, pulling a little bit to the downside. And some of those Dow stocks, we had a Procter & Gamble, we had CAT, we had Dow, all pulling to the downside. We had a pretty nice performance. So you get Boeing moving, you get Microsoft, you get Apple, then throw in a little bit of Lucid just to add to it, Splunk, Tesla. You know the idea. That really was a big part of what was happening yesterday. As we started to digest more and more, and as we got closer to this morning, markets started to shape a little bit differently. As a matter of fact, into the pre-market, we really started to drop. And then suddenly, as we were getting closer to the opening of pre-market, we're down close to 500 points on the Dow. Now, we did have those jobless claims a little bit higher than expected. I don't think that was necessarily really the driver, however, but that was one of the items that came up today. But we started off down 500, then 600, 675, 700. It's almost like an auction, 740. And we've come off of that low. But boy, the selling pressure has been unbelievable early on, this first hour of trade. Same thing going on, obviously, with the NASDAQ. NASDAQ was down as much as 400 points, started off about 250, just cascaded a little bit lower and a little bit lower in this first hour. Yes, there's volatility coming back into this marketplace. We are back over that 30 mark, trading a little bit closer to 31 and a half. You look at that VIXN, the VXN, the volatility of the NASDAQ, that's up there as well, trading closer and closer to 38 as we've been getting into the day. Bitcoin, still hanging around that 21,000 level. That's certainly been something that a lot of people have been talking about. And clearly, this has been a major issue, and a lot of folks are really getting hurt. And you can understand as you're selling some of these and forced sells in some cases, is that cascading into the rest of the market as well? Because you're looking for winners to take off some of those profits as well, or losses rather in this case. Nat gas hanging around 8. Yes, it had been around 9 for a while, had that dramatic pullback, but here we are still trading around 8. But it's crude today that really does stand out for me. It pulled back again today, and here we are trading in the 113s. That's a pretty big drop now, just in a couple of days. Just a couple of days ago, trading 120, 122, and here we are now, 113. That says a lot. You look at the 2-year and the 10-year, pulling back a little bit, not major moves necessarily today, but a little bit of easing back, at least for now. We'll see if that continues. Every single sector to start off the day was in the negative territory. Not only that, but the best performing sector was still down 1.8% to start off the day. So it gives you an idea of just how much selling across the board, and nobody is safe in this market. Consumer discretionary continues to drop. It was down about 3.5%, a little closer to 4%. You had energy also down a little over 3%. That's over 4% to the downside now. Materials just kind of hanging in there, but still down a little over 3% there. Also, technology slipped a little bit more, down close to 3.5%. You get the idea. Everything kind of getting a little bit from the starting moment to now in this first hour, just a little bit of increased selling. Not everything. Actually, certain areas of the market, staples that were the best performing of the worst, was 1.8% to the downside. Now, actually, only 0.6% to the downside. So a little bit of improvement there, but nonetheless, still seeing a lot of selling and close to 700 points to the downside. Some of the storylines that are impacting today, I'm telling you right now, I would say Twitter stands out because that was green early. So that certainly was something, because it was very difficult to find anything, very much of anything, into the green today. The Dow dipped under 30,000. The NASDAQ dipped back under 11,000. Those were pretty interesting levels. And a lot of people, they might not necessarily be on the charts, but just big number levels that we are seeing ourselves dip back underneath. So that's something as well. Where is a lot of the power that's really pushing the markets lower? Well, airlines getting hit. United, American, Delta, all to the downside. What else are we seeing? Well, we're seeing cruise ships. We're looking at Carnival. We're looking at Royal. We're looking at Norwegian, all to the downside in a big way. Airbnb. We're looking at Moderna. We're looking at Qualcomm. We're looking at a lot of different names, Apple, Microsoft, that are down significantly today, and that is that pull that we are getting. And boy, as I said, it is tough to find stuff in positive territory, in the green right now. Procter & Gamble's one of them. Kimberly-Clark is another one. Kellogg's is another one. You get the idea here of what kind of names these are. Church & Dwight, another one of those names. CF started in the green and then started to sift it back down a little bit, back into the red. We'll see how that all sorts out. Before we get to the unusual, I just got to point this out really quick. Just about a week ago, I was on the halftime report talking with the guys, and eventually on the 5 o'clock show, just giving them a little bit of rundown of how big some of the option paper is right now and buying to the downside. Just keep this in mind. It was just last week I was talking about this. LQD. So investment rate bonds. It was trading around 108. We had 135,000 of the October 95 puts. Those were getting bought. It's a little bit lower than that now. Spiders, 381. Now they're 368. 28,000 the July 372 puts being bought. And I'm looking also the Russell 2000 IWM was 174. Now it's 165. They bought 30,000 the July 167 puts there. We had even more spider puts getting bought. It was trading around 375. We had 8,500 of the July 370s. We also had 15,000 of the July 365 puts. I mean, it just goes on and on. It just shows you that these big ETF buys have really been paying off for some of these buyers, whether they're protection or they're actually just going out outright buying and looking, in this case, to the downside. Well, I got two more ETFs for you. Usually I stay away from this, but I continue to see these, and these are the first two unusual options of the day for us, so it really did stand out. Spiders, they were trading right around 368. We had 29,000 of the July 354 puts being bought. Those were somewhere between $6.50 and $7. That was right out of the gate today that we saw that put buying. On top of that, we've got the XLF. That's number two, trading around 30.70. We had a buyer of 18,000, pretty good size. August 29 puts for about 99 cents. Now they're offsetting those puts by selling another put that's to the downside. We're just focusing on the buy side here, but this was done in a spread. So they bought 18,000 of the 29 puts, looking for those financials to slip back even a little bit more. So it gives you a little bit of an idea. The ETF buying has been pretty daggone right on of late. We'll see if that continues. The toughest part about this, though, is are these hedges or are these outright buys? And that's the most difficult thing on the put side, because we all know that there's far more longs than shorts out there. So that makes it a little bit more of a difficult determination to know exactly what's going on. But I can tell you, we have been seeing consistently put buying, put buying, put buying. And without yesterday's nice run for 300 points, these put buyers have been pretty much dead on for a while now. I'm Pete Najarian. This is The Take. We're doing this every single morning, of course, as you know, 9:30 Central, 10:30 Eastern Time. It's a lot of fun. Really excited about what we've got coming up as well. And the Rebels Edge, keep an eye out for that as well. That's every Monday. And we're going to be showing you that. John and I are going to get together. We know it's the holiday and all. We're still going to be doing it. So we'll talk to you then. I'm Pete Najarian. Have a great day of trading.